Because of depreciation, rental real estate is unique. You can be cash flow positive while your tax filing shows a loss. The IRS typically limits these passive losses on your tax return, but the real estate professional designation, a tax filing status, not a license, removes the loss limitation and allows qualified individuals to use this depreciation loss to offset earned income, thereby reducing the total taxable income and perhaps even to a lower tax bracket. This is one of the reasons I walked away from a comfortable tech job. Hi, I'm Elsie Wu, mortgage broker and real estate investor. To show you how to qualify and start leveraging this tax benefit, please welcome Ben Koala, financial planner, CPA. Ben, please show us how this real estate professional status can benefit real estate investors.
Typically, with rental real estate losses, those are limited. There are passive loss limitations from the IRS, and on much of passive losses, you cannot claim any net loss. Residential real estate is treated as a hybrid of active and passive, where the IRS does allow you to deduct losses if your adjusted gross income is $100,000 or less. You can deduct up to $25,000 of rental losses. Once your AGI goes above $100,000, that begins to phase out and fully phase out at $150,000 of AGI. And that's the same for single and for married. Many California taxpayers will be at an AGI of $150,000 or higher, especially as a married couple. So if you have a $25,000 loss in your real estate activities, you cannot use that to offset your W-2 and other income. It will just get carried forward indefinitely on the Form 8582 passive loss limitations. And those losses could be used in one of three circumstances. A, your AGA either drops beneath the threshold. B is if you have positive income in a future year, that loss carry forward can go to offset that future year's positive income. Or finally, C is if you sell the property, those rental losses will get added back to your basis to reduce your capital gain and depreciation recapture. But assuming one of those three things does not happen, then these losses just banking forward and not benefiting you at all over all these years. So if you are realizing a loss on your rental real estate, the real estate professional will allow you to deduct those losses in full. So you have to meet the 750 hours and the more than 50% of your working time. But let's say that you have John making $500,000 a year, and then you have Jane at home, maybe kids, but putting the hours into managing their 5 rental properties, because the 750 hours does not have to be per property. It just has to be across all the properties. So the more properties, more easy it is to justify the amount of hours put in. So she stays home. She puts at least 750 hours into managing the real estate properties and has no other job that exceeds that 750 hours. Then say they have $50,000 in losses across those properties, their AGI is reduced to $450,000. So it's able to help offset John's W-2 income, whereas you would not be able to do that without the real estate professional qualification. So the real estate professional really only helps you if you have a loss, because there's not any benefit. It doesn't hurt you if you have a gain, but it's just really no point to it. So one of the main things I always like to explain to investors is your goal in investing should be to make money, not to lose money. However, real estate has some special features where you might have a positive cash flow, but still a tax loss. So for example, we look at one property worth $1 million. You aggregate 80% to the building, 20% to the land. That generates about just shy of $30,000 a year in depreciation. So you could have positive cash flow of $10,000, but a tax loss of $20,000. So it's still a good investment because you're making money, but to the IRS, you have that net loss that you're able to fully deduct if you qualify as a real estate professional. And if you apply that to 5 properties, now you have a $100,000 loss, assuming that they all have a $20,000 net loss. Again, you don't get into investing with the goal of losing money, but you can have a cash positive investment with a tax negative outcome.
So in that example, if John has a W-2 of $500,000 a year and you have a Schedule E loss, including depreciation of $100,000, then that $100,000 could be used to reduce the taxable income on John's $500,000.
Correct. And now with bonus depreciation rules, that opens up the door for even more potential losses on paper, which might not be actual cash outflow losses.
And you do not need to have a real estate license
You
or
do
be a
not.
practicing real estate agent to
You
qualify.
do not. It, might help strengthen your case, but it's absolutely not necessary.
All right.
And the vast majority of the time that I see this is with a non working spouse. Because if you're a single person, it's very unlikely that your only income is from, rental real estate. It could be, but if you're generating a loss, it's going to be kind of hard to sustain yourself. Again, we talked, you could have a positive cash flow and a net loss, but you need enough income to support yourself in California. I do see that occasionally with somebody who is retired, who has over the expense of their career acquired a number of rental properties, and now they're not working anymore. They're collecting their pension, Social Security, and now they're putting in 70 hours into their 10 rental properties that they accumulated over the years, and they don't have any other earned income because they're retired, and they have a net loss on paper from these various rental activities. You can do that. You could be a real estate professional after retiring from your job. So that's something that I've helped clients with.
All right. Thank you, Ben. Real estate is a great way to build wealth tax efficiently. Knowing the rules is the first step, and the next step is taking action. Plan your strategy with Ben Koala, our expert CPA, financial planner, and attorney. You can find his direct contact information displayed on your screen now, as well as a direct link in the show notes below. For questions on real estate financing and loans, reach out to us directly at Abundance. We serve real estate investors in over 40 states by accessing capital from more than 30 different wholesale lenders. We do the shopping and managing the process for you so you can focus on acquisitions and asset management. If you found this information valuable, please hit the like button and subscribe. We will see you in the next segment.